everyone, in today's video, I'm not going to talk about any individual stocks. Instead, I want to share 3 ETFs that I believe are some of the best long-term opportunities you can buy right now. The kind of investments where you can keep adding money consistently and let compounding do the heavy lifting for you. Now, the reason I'm making this video today is because the stock market has been under a lot of pressure recently, mostly due to geopolitical events and global uncertainty. But here's the interesting part. Times like these are often the best opportunities for long-term investors. When fear in the market is high, when the VIX is above 25, and when the fear and greed index is sitting in the extreme fear zone, that's usually when high-quality investments become much cheaper than they should be. And historically, investors who continue buying during these fearful moments are often the ones who benefit the most once market recovers. So in this video, I'm going to walk you through 3 ETFs that I'm personally buying and accumulating for the long term. And I'll also show you exactly how many shares I own and why I have high conviction in them. So let's dive right into it. The 3 ETFs we'll be talking about today are SCHG, which is the Schwab US Large Cap Growth ETF, JEPQ, which is JPMorgan Nasdaq Equity Premium Income ETF, and IBIT, which is the iShares Bitcoin Trust. I'll also share exactly how many shares I own, my average prices, and what my long-term investing strategy looks like. But as always, this is not a financial advice. Make sure you do your own research and invest based on what fits your investing journey. Alright, before jumping into the ETFs themselves, let's talk about something very important. When markets are calm and stocks are hitting all-time highs, everyone feels confident about investing. But when there's fear in the market, when headlines are negative and when volatility spikes, that's usually when investors panic and stop buying. Ironically, those moments are often the best opportunities because when uncertainty fades and markets recovers, stocks usually move very quickly and people who waited on the sidelines often miss those moves. That's why I always say market pullbacks are opportunities, not threats, especially if your time horizon is at least 10 to 15 years. Alright, now coming on to my first ETF, which is SCHG. I've talked about this on my channel many times. I've mentioned this before that I only buy SCHG when the price drops below the 200-day EMA on the daily chart. And once it drops below that level, I start accumulating shares and continue buying as long as it stays there. Right now, that's exactly what's happening. Currently, I have 406 shares of SCHG at an average price of around $26, and overall I'm up about 14% on this position. I originally started building this portfolio last year, and during the Liberation Day market correction, that was when the market experienced a sharp pullback and I took advantage of the dip to buy a large chunk of my shares. After that correction, the market rallied strongly and SCHG kept moving higher. Because of that, I never really got another chance to add more shares until now. Recently, SCHG finally came back down to its 200-day EMA, which is the level I've been waiting for. So I already started buying again. Just recently, I bought 34 shares at around $29.90 and I plan to keep accumulating if the opportunity continues. My long-term goal is pretty simple. I want to build this position up to 1,000 shares, which would represent roughly $30,000 invested. And for me, this is a long-term wealth building investment. I have a lot of confidence in US large cap growth companies, and historically, these companies have consistently driven market growth. Temporary dips are completely normal when investing for 10 to 15 years. That's why I view these moments are golden opportunities to buy in large chunks and let the investment grow over time. If you look at the history, the RSI for SCHG rarely drops below 30, but when it does, those movements have historically been very strong long-term buying opportunities. Investors who bought those dips in the past often ended up in making significant returns over time. And coming to why I like SCHG, there are a few reasons why I specifically chose SCHG among many growth ETFs out there. First is their performance. Since its inception, SCHG has delivered around 16% annual average returns, which is fantastic for a long-term growth ETF. Second is their expense ratio, which is extremely low at around 0.04%. That means you keep more of your investment returns over time. And finally, SCHG has strong exposure to technology and growth companies, which continues to drive innovation and economic growth. For me, this is simply one of the best growth ETFs available out there. Alright, now to the second ETF which I invest in is JPMorgan Nasdaq Equity Premium Income ETF, ticker symbol JEPQ. This ETF tracks the Nasdaq 100 index, but it also generates income through option strategies. Now, there is definitely some overlap between SCHG and JEPQ, especially in technology holdings. SCHG has roughly 44% exposure to tech stocks, while JEPQ is even higher at around 51%. But the reason I still invest in both is because JEPQ provides something extra, which is income. My JEPQ position right now, I have 118 shares of JEPQ at an average price of about $55. And one of the biggest benefits of this ETF is its dividend yield of around 10% annually. And the best part is that the dividends are paid monthly. That's incredibly powerful when it comes to compounding over time. Let me give you an example from my own account. Just last week, I received about $59 in dividends. The previous month was around $45, and in January, it was about $55. On average, I'm receiving roughly $50 every month in dividends, and I'm not spending that money. Instead, I'm reinvesting those dividends to buy more shares. That's how compounding really starts to work. And my goal over the next 5 years is to slowly accumulate around 1,000 shares of JEPQ. And if I can reach that level, the monthly dividend income alone could be a meaningful passive income stream. And on top of that, the ETF itself should also appreciate in value over time. So it becomes a combination of growth plus income. The final ETF I'm buying and will continue to buy is iShares Bitcoin Trust, ticker symbol IBIT. This ETF tracks the price of Bitcoin, and it's currently the largest Bitcoin ETF in the world. It also has one of the lowest expense ratios among Bitcoin ETFs, around 0.25%. Right now, I have 234 shares of IBIT at an average price of around $49, and I'm currently down about 17% on this position. But that doesn't bother me because this is a long-term bet. In fact, I'm currently doing a 15-year investing challenge where I invest both into SCHG and IBIT. Every single week, I invest $50 into each ETF. So that means $100 per week total, consistently invested. I'm personally a big believer in Bitcoin and cryptocurrency over the long term. Right now, Bitcoin has been under significant pressure and is roughly down 60% from its all-time highs. Because of that, IBIT has also dropped from around $70 down to $40. But for long-term investors, those kind of pullbacks can create opportunities. Over the long run, I believe Bitcoin adoption will continue to grow, and if that happens, IBIT could easily move above $100 in the future. That's why I continue to buy both through my weekly recurring investments and occasionally buying extra shares when prices drop. So, to summarize my approach during periods of market fear and uncertainty, I focus on investing in high conviction ETFs rather than trying to time individual stocks. Right now, the 3 ETFs I'm consistently buying are SCHG for long-term growth, JEPQ for monthly passive income, and IBIT for long-term Bitcoin exposure. If you want to build serious wealth over time, one of the most important things is not panicking during painful markets. Because when markets are fearful, high quality assets often become extremely cheap. And once the uncertainty fades, those same assets can move higher very quickly. So those are the ETFs I'm buying right now. I'd love to hear your thoughts. What ETFs are you currently investing in? Do you agree with my strategy or do you have a different approach? If you have any ideas or strategies I could learn from, please drop them in the comments below. And if you have enjoyed this video, please support the channel by liking the video and subscribing to the channel. That's all for this video. Thanks for watching and I'll see you in the next one.